The United States government has just announced that it will not be purchasing any more Bitcoin, and this decision has already triggered a reaction across the crypto markets. Instead of buying new Bitcoin, officials have confirmed that they will hold on to the Bitcoin confiscated from illicit activities and keep it as a strategic reserve. This is a major shift in tone, as many had speculated that the US might begin actively accumulating Bitcoin, but the government has now made it clear that their strategy is not to purchase. At the same time, the SEC is taking center stage. Paul Atkins, the current chairman, is speaking directly on Fox Business about a comprehensive plan to regulate cryptocurrencies. His comments are especially important because regulation in the US is the foundation on which the entire future of crypto adoption will be built. The SEC's new approach aims to modernize financial rules and provide a clear framework for digital assets. For investors and institutions, this could be a game-changing development. The markets reacted quickly to the government's announcement. Bitcoin slipped toward $117,000, down nearly 1%, while Ethereum corrected by almost 3% to around $4,500. XRP is at $0.306, seeing a mild correction of 1.6%. Solana dropped more sharply, down more than 4%, while most of the broader market is in the red. The only exceptions are a handful of tokens like ADA, Leo, Hype Token, and Tincture Coin, which are posting small gains. It's clear that the headline about the US not buying Bitcoin is weighing heavily on investor sentiment, at least in the short term. But beyond the price action, the strategic implications are significant. The US is signaling that Bitcoin will not be a centerpiece of its reserves. Instead, confiscated assets will be held as a store of value, but the focus is on regulation and innovation. SEC Chairman Paul Atkins stated that every division of the SEC is mobilizing to make the United States the global capital of cryptocurrencies. This suggests a strong political and institutional commitment to embracing digital assets, but in a regulated and structured way. This ties directly into XRP's unique position. XRP remains the only cryptocurrency with regulatory clarity in the US, having been officially declared not a security by a judge. This clarity gives it a major advantage over other assets still facing uncertainty. Ripple Labs is doubling down on XRP's role as the backbone of RippleNet, the global payments network designed to modernize financial transactions. The vision is not just about payments within the US, but about enabling real-time, low-cost settlements worldwide. Ripple's commitment is clear: expand XRP's utility beyond simple transfers and integrate it deeply into global financial infrastructure. This aligns perfectly with the US government's broader vision of modernizing financial rails through crypto adoption. By supporting frameworks like ISO 20022 and prioritizing utility-driven tokens, the US is creating conditions where XRP can thrive. It is not just about speculation on price, but about becoming the technology that powers institutional-grade finance. The announcement that the US will not buy Bitcoin could seem negative on the surface, but also opens the door for other cryptocurrencies to play a greater role in the country's long-term strategy. While Bitcoin is being treated as a strategic reserve, tokens like XRP, Cardano, and Solana could become the focus of integration into regulated frameworks. This differentiation highlights the unique strengths of assets that provide real-world solutions rather than serving primarily as stores of value. The Treasury Secretary, Scott Bessent, emphasized that confiscated Bitcoin and Ethereum will remain in reserve, but beyond that, the government is not looking to accumulate. This stands in contrast to Ripple's expansion, where new partnerships and pilot programs continue to showcase XRP's relevance. RippleNet depends directly on XRP, and Ripple Labs continues to push for its adoption on a global scale. For institutions seeking efficiency and compliance, XRP offers a clear path forward. Looking ahead, the key factors for the market will be how quickly the SEC finalizes its regulatory framework, how institutions respond to the clarity provided, and how the US positions itself in the broader race for global crypto leadership. with Paul Atkins emphasizing regulation and Donald Trump signaling support for innovation. The stage is set for a new era in the relationship between government and crypto. For XRP holders, this is a pivotal moment. As the only crypto with regulatory approval in the US, XRP is positioned to benefit from every step toward broader adoption. While short-term corrections may occur, the long-term narrative is stronger than ever. Investors should watch closely as the US shifts from speculation toward structured, utility-driven adoption. The decision not to buy Bitcoin is just one piece of a larger puzzle, one that points to a future where XRP and similar assets could become core components of the financial system. The crypto market thrives on narratives, and right now, the narrative is changing. Bitcoin will remain important, but it may not be the asset that defines the next phase of adoption. With regulation advancing and institutions looking for reliable solutions, XRP is in the spotlight like never before.